A very good morning, everybody. Welcome to the Flow Show, Monday, the 7th of July. A new week begins, and we're all well into the trade tariff stuff that we've been mourning about for the last couple of weeks. You all knew it was coming. Here we are, and here we are trading it as well now. So lots to look forward to on that front this weekend, or this week, I should say. Morning, Kay. How's your weekend, mate?
Morning, Ryan. Morning, everybody. Yeah, it was all right, mate. It was all right. Been busy, but trying to clean up our garage, but it's worse than an Amazon warehouse in there, so I gave up.
Yeah, don't envy that task whatsoever. But yeah, these jobs have got to be done. Right, let's get cracking. Get stuck into what's going on. I'm going to start with a bit of data. And this data coming out of Japan and making a rather important point, if you like. It's wages numbers and pay numbers from Japan. Now, it's got some of these numbers on and some not on this calendar. So overall wages coming in at 1%, far lower than the 2.4% expected and the 2% previously. Overtime pay year on year also coming in softer at 1%. Now, within those numbers, we have the important real cash earnings. They came in minus 2.9% versus a prior minus 1.8%. They were expected to come in at minus 1.7%, so that was better. Full-time scheduled pay year on year came in at 2.4% from a prior 2.5%. So that was slightly softer as well. But why is that real cash earnings important? Because it's still well in the negative, down 2.9%. And this is the impact of inflation, which puts the Bank of Japan in a bit of a situation, well, the same usual situation between a rock and a hard place. They are seeing inflation, but they're not seeing real wage gains. And they want to see real wage gains, and particularly the government wants to see real wage gains. So they could potentially hike on the inflation side of things, but not on the wages side of things. What side of the fence do they fall on, Kay?
The stuck side, stuck on top of the like what separates one fence from the other, which hurts when you sit on it. When yeah, I think they're stuck over there, mate. At least for what the Bank of Japan hiking is concerned. They don't know what's going on with the tariff stuff. They did not get very good numbers on. Well, they actually got worse numbers on the wages. Two things that they are stuck, mate. I don't think they can do much right here and now, unless they get like a really good trade deal for Japan, which, if you listen to Misters Trump and Besant, is not going to happen anytime soon.
Yeah. So do they think, well, let's think of this situation. Could we find ourselves in a situation where they'll actually need to hike to get inflation under control, which will then help real wages in becoming positive?
Hiking rates doesn't do anything to wages. That's a decision that companies make. I don't think that if you hike the rates from 0.5% to 0.75%, what's it going to do on the wages? Nothing.
No, I mean, if they bring inflation lower, then those real wages turn positive, or can turn positive, because you take away the inflation impact.
It's all about pass through. But we know that the Japanese government is thinking about really sending checks to people. But that is also not going to affect wages. The only thing that in Japan they can hope now for is a deal with the US, where they are not going to be imposed too many tariffs, which is either going to, it could weigh a little bit on inflation, but if you impose too high tariffs on Japanese goods, and people hold back from buying Japanese goods is going to be bad for the economy. So I really I don't I don't know what's going to bring that inflation down materially, and I wouldn't think it's a 0.25% hike or at least a short-term plaster on inflation, and I don't see how it's going to help materially now. We've seen with steady rates, and the US is a pretty decent example. Inflation does what it does. It's down to pass through of price hikes, yes or no. The how shall I say, the if you the oh, I'm lost for words now. The rents and stuff, they do what they want. They've been moving up and down, and perhaps being a bit sticky. Without the Fed even moving anything to try to move inflation around. I doubt that the Bank of Japan raising a 0.25% to fight inflation now is going to be any helpful.
Yeah.
You can say that mathematically it will bring the real wages up a little bit, but it's not going to help anybody on the street.
Yeah, exactly. So, as we said, it's in that between a rock and a hard place for even longer. Right, over to the Bank of England, and BOE's Taylor says we have a long way to go to get to neutral. Says there is a risk of inflation falling below target. As the 2025 inflation bump is expected to subside. He says labour market slack has opened up and is expanding. Says a soft landing for the UK economy is at risk. I don't know what he's talking about landings. We haven't even taken off yet. But anyway, that's what he says. Need to reach a lower neutral level over 2026 and 2027. And says the best approach is to cut and hold for longer. The Times reporting that UK employers' appetite for hiring falls to a 13-year low. The labour market is something that a lot of BOE members are focusing on at the moment. ECB's McClough says inflation expectations are well anchored. Says that inflation is going to be more volatile on AI and due to demographics. Says ECB must be more agile when using forward guidance. ECB Centeno says ECB must act if growth remains flat and inflation stays close to 1%. ECB's Nagel, the German ECB bod, says taking into account the stronger than expected Q1 growth, a slight increase in German GDP year on year appears possible. Bit of a hope trade there. Says there is reason for cautionary optimism for the future. UBS expects the ECB to cut rates by 25 pips in July, which is going against a lot of consensus, though it is all down to trade talks and whatnot. They say if there is a benign outcome in the US-EU trade talks, we will abandon our forecast of a July cut. Even so, they're going out on a bit of a limb there. A bit of data this morning out of Europe. We had German industrial production tacking on a decent 1.2% gain. Was expecting another negative minus 0.6% year on year. Also a positive 1.2% versus minus 2.24% prior. We also had out Sweden's CPI. Now, the Riksbank previously in their last meeting said that they do see another cut sometime this year, and that they also are expecting inflation to come in lower than their prior forecasts. Well, not today, they haven't. They've come in higher than forecasted, at least by market players. Inflation was expected to tick up to 2.5%. That came in at 2.9%. So much hotter there, same as the headline CPI. 0.8% was expected to rise to 0.4%. So that's probably going to keep them sitting on their hands a little bit longer, waiting for their next cut. Eurozone retail sales coming in a wonderful down 0.7%, not as crappy as expected, but still a negative for May. Year-on-year sales were up a bit more than expected, 1.8%. An EU spokesman talking about trade and all sorts going on with China as well. So they're still finalising EU-China Trade Summit programme with their Chinese counterparts. There's been a few bum fights going on with medical supplies. Europe have stopped China from accessing some medical equipment. China's retaliated in kind and then put tariffs on cognac and brandies and all that sort of stuff, and so there's lots of bum fights going on there. EU and US trade talks, though, nothing happened last week. Negotiations were set to continue into the weekend, and apparently EU negotiators are looking to secure a US tariff pause extension if no wider trade deal has agreed. Everybody is rushing around trying to get stuff done ahead of this July 9th deadline, which is now not a deadline anymore. Deadline is there, but if no deals are done, then tariffs will be kicked in, but they won't happen and start until the 1st of August. So we've got another tariff deadline can kick, if you like. Mexican President Sheinbaum says that they are close to a security agreement with the US, but they're also seeking a global deal on migration and trade. Lutnick was out confirming that tariffs will take effect on August the 1st. Trump says we will have a deal or letters with most nations done by July the 9th. He's also apparently signalled that they would slap on an extra 10% tariff on countries who align with BRICS nations. So this is the BRICS group, which obviously includes the like of Russia and China, to which China wasn't very happy about. OPEC, OPEC Plus, they hiked their output for August by 548,000 barrels per day. That was versus what rumours we heard last week or the week before of 411 barrels per day, and people expecting another 550k hike for September. So OPEC going above where the market was sitting on that, scene oil looking softer this morning. The Kremlin responded to Trump's comments on a call with Putin last week, saying he was disappointed, saying that they pay very close attention to all Trump's statements. And Putin told Trump that Russia expects to agree a date for a third round of talks with Ukraine. When they agree that, who knows? But that's where we are. So we are in the tariff orbit now. Friday was obviously a holiday in the US, so trading was pretty lackluster. European markets took that as a clue to put their feet up a bit as well. Hence why now we're seeing a bit more of a reaction today as markets come back fully. As I said, we are in this trade tariff stuff. We know the broad strokes of it. There's going to be deals, no deals, can kicks, threats, and all the rest of it. And the market is already getting a little bit jumpy with the dollar finding a bit of a bid, much as we've seen previously when we've got to these moments. So there's been a fair few moves going on. Kay, we know the broad strokes of it. We're either going to get deals on or before July 9th. We're going to get those countries who are going to get an exemption or a can kick because they're negotiating in good faith. And we're also potentially going to get those that are not close to a deal getting the threat of tariffs. Is this the same as what we've seen at every deadline? Is it going to play out the same way where we get another can kick?
Yeah, I think you split the deadline into two words. It's a deadline, as Besant already said. He said like stuff a roll back to what's been announced on the 2nd of April would happen if by the 1st of August they don't see any results, or at least people sitting seriously around the table. Read coming to what US is asking. We know that by the 9th there's probably, well, I mean, the chances are virtually zero to have a deal with the EU, Japan, and China. And so So you talk about the two other big blocks and the biggest investor in the US. So what's left? We heard about the BRICS thing. That is, I don't. Well, okay. Let's say it's always possible, but I don't think that China will be straight away in there because we know that they are in regular talks with each other. Whether they agree, well, they don't agree right now, but. Agreeing on or not straight away is probably with China that those deadlines are just a concept. They are not going to be followed. EU should be a bit more interesting, I think. We won't have a an agreement that on the 9th, but somewhere von der Leyen is trying to rally the troops around her, and she's been asking this weekend to the member countries whether she finally could go to the US and say, I mean, go to the US not physically, but go to the US and say like, okay, we have a basis to work on, a bit like the structure of a deal with the UK. I don't know whether what the results of that were, but I would suspect that before or into the 9th, we're going to hear a bit more about the EU. China is going to drag on, but yeah, all the rest, I think we can expect minor deals like Vietnam style for countries that have no choice. Um, the one that's going to be interesting, and then thinking again about BRICS is South Africa because I read something over the weekend. The central bank governor hoping for South Africa to come off the grey list, which are the big blocs put together as countries seen to facilitate naughty money or money laundering for bad states and stuff. They are hoping to come off of it, but then if Trump slaps 10% extra tariffs on all the BRICS, it's not going to help much for South Africa. But there's one there that I'm on the side of everything that I'm actually closely watching because South African rand has been doing pretty well. This morning it got a little bit of a knock, I think. First of all, the dollar is doing better, but I also think this BRICS thing is interesting enough to follow. So, but I think we are going to see a very how shall I say, very different approach with different countries. But to me, the big blocks, at least, I mean, there's no chance or virtually no chance to now have a serious deal in place before the 9th or even on the 9th, you know.
Yeah, exactly. So how is this? Do you reckon is going to affect trends and stuff? I mean, you know, we know the dollar's been weaker. We know euro's been rallying. Money going into Europe. Is this a turn in the trend, or is this just the trade noise affecting it? And then after that's all done and passed, and you know the deadline's been kicked or whatever, we go back to the trend because this is a point where that could catch a lot of traders out.
Mm. I think it's important enough what's going to happen on the 9th to at least see a decent move. Has to be what has to be acknowledged in everything that we see right now is that countries are not completely turning their back to the US. They want to play hardline, but they also want to make deals because the US is a gigantic market, as we know. So any structure of a deal could be, and let's just take the euro for an instance because you're on the euro there. Just have a structure of a deal is probably going to be beneficial, dare I say, for both. So that is, the dollar is going to be doing okay, but the euro should be doing okay versus other currencies on the crosses. Now, then the details. If the details are going a lot in the way of the US, then I think we could have a bit of at least a partial reset of the trends that we see. Um, translated into prices, I think a move down to 115 on the euro is not to be excluded, because if the euro gives in to a lot what the US is asking, and then I'm thinking about, and everybody is staring themselves blind on those tariffs. But imagine that Europe says, okay, we are going to invest in the US, and like I'm going to give an example, like BMW, I'm going to build plants in the US to produce over there, and that I think is going to be taken as a pretty positive sign for the US, right? So those are those things that I think we need to watch out for. Um, and we can have like relatively big setbacks in what we have seen. Now, to reverse the trend, there's going to be more needed, and in my opinion, because um, thinking again about the big blocks and China, how China is. Sorry, yeah, China and the EU. China is still a different thing, but how Japan is playing it now as well. They actually, and they're still right, saying that they don't want to give in to whatever Trump wants to slap on tariffs. But if you think about the euro, for instance, if they say like, okay, um, we're going to invest in the US, but in that case, no tariffs, mate. Okay, and we keep what we have now. Then I think we are not going to change the trend at all, because once the dust settles on the tariffs, if Trump doesn't get what he wants, like for instance, if there are less than big investments in the US, then everybody is going to think back about the big beautiful bill and all the costs that come with it. So it's going to be mega important to know how the US will fare with all these tariffs, and it's going to be maybe even take a bit of time to unravel everything that's going on. So for now, where I am at is, yes, on the face of it, if the US gets deals when people come sort of their way, I think we can see a bit of a recovery in the dollar, actually. But then we look at every detail and keep that beautiful bill in our mind. Is it going to reduce? Is it going to create enough income into the US?
Yeah, yeah. I think this week is going to be different to how we were trading last week and the week before, and then I think that's what traders have got to realise. Everyone's looking at 120 still in euro dollar, which may be possible, but the reasons why we might get there might be slightly different to what they were this week. So this is another short-term event that we have to trade as a whole separate ball game, compared to the stuff we've been trained in longer term. No one is going to turn around at the end of these trade talks unless, as Kay says, they're the best trade deals the US has ever done. No one's going to turn around and go, oh, right, well, we're going to be wrong in exiting out of the US and we're going to go flooding back. Okay, that's not going to happen overnight, the same way as it hasn't happened overnight with everyone exiting out of dollars and whatnot. But that doesn't mean you're going to see the dollar gaining just on this short-term noise. So treat it as such. This week is going to be about trading this event only, and then whether the details on that change the wider picture.
Yeah,
So that's the way you look at it.
and the funny thing is we can't trade every currency versus the dollar in the same way, because now I'm going to take those two examples: is the euro and the yen. Yen, for as long as there is no trade deal, we see the reaction. Yen is on the weak footing, right? Because Japan really needs a deal with the US to survive is a big word, but we know about the problems in Japan. I mean, demographics and stuff like that. They need the US. They need the US for their companies to basically survive. So we see this thing, and they somewhere, well, they will still trade with China, but they are trying to not to rely too much on China, because China is one huge a huge sticking point in all of this, because politically they and geopolitically especially they are not really the nice people in the thing. But then you look at the euro. for as long as the Europe was playing hardball, and with all the structures that have been put in place to revive, let's say, and to spend, to restructure, to build in Europe, we've seen the euro actually doing better against the US, for as long as Europe was really playing hardball and banking on other stuff, and so we're seeing two very different approaches of the market in two different blocks, and that is something that traders also always should bear in their mind. Is like, what's happening, which currency is going to be affected in which way when we get a trade deal or not, because it's fundamentally different. We have seen so big difference in reactions in markets, and reactions in markets are nothing else than people moving their money in or out. Okay, so we are seeing all those big inflows in Europe. That is not going to; those people are not going to stop overnight. That's why I'm saying, like, you could see a correction in this trend, but is it going to change the trend? Remains the question, because the investors that have been reallocating funds to Europe, they are not sitting there. On the 9th of July, I reversed the whole lot, right? Forget it. Those people don't move like we do in a flash, right? So this whole thing, we need to always bear in mind which currency against the dollar, because you have the dollar is going to react, but every currency is going to react differently versus the dollar, because of how it has been already reacting ahead of any deals or failure to have a deal.
Yeah, and that's why it's been my thought that dollar yen yen is going to be the potentially the bigger currency mover over all this stuff, particularly if there's no deal, because there's different implications. There's probably greater monetary policy implications for a deal or no deal with Japan than there is monetary implications for Europe on a deal or no deal. So yeah, it's different risk profiles in terms of what this deal or no deal means based on the trading partners, the size of them, what they do, and so on and so forth. Japan is a big investor in the US. It does a lot already in the US. So anything that's negative towards that, I think it hits yen harder than any negative towards Europe. But these are things we'll be watching for. None of us know for sure, but price action will tell us what's going on. Anyway, right, let's have a quick look at what's coming up this week. A bit of a quieter week, as is often the case after NFP week. But we do have a couple of central banks. Got the RBA tomorrow. They're expected to cut by 25. Do you think that's a done deal, Kay, or could there be a little pause in the pipe?
In theory, it should be a shoo-in, and data have been supportive as well. So the surprise trade on this one is a standstill. I'm not sure they can really do that. If I were them, I would take the advantage now to do it before the currency gets too weak, perhaps. But yeah, the other one is to know whether Bullock is going to stay neutral or get back on the hawkish train. But I don't think that anything is warranted now for her to be hawkish, really, because the data haven't been supportive for her to be really hawkish. So yeah, I think basically, what are we going to say? Neutral cut? That's somewhere, I think, the most reasonable expectation.
Yeah, and then on Wednesday we have the RBNZ who are expected to stay on hold. I don't really see any big reasons why they should change their tune with rates where they are now, around about their neutral area. Do you think any surprises from them guys as well?
I wouldn't say so. No, I wouldn't say so. But the thing is, anything which is out of the expected range, let's say an overly dovish of, and again, I mean, how is it possible to be hawkish in current scenario, right? But any big deviation from the neutral expectations could see the Kiwi put in a bit of a move just because of the lack of liquidity in something like the New Zealand dollar versus even the Aussie, and let alone other bigger currencies. So we need to be a little bit cautious on the Kiwi at all times, because any surprise to any side can create a bigger move actually.
Yeah, thanks, mate. Apart from that, we've got some China inflation data. Inflation has been pretty weak over there, but it seems that they're not as in a hurry to cut rates further over there. So we'll see whether this inflation number will get the market moving that way. Japan PPI on Thursday. A few little bits and bobs, but nothing much of note. Jobless claims we'll keep an eye on, but there's been no reason why the trend is changing there. Final numbers for CPI from some countries, Germany, France, and some monthly GDP numbers from the UK. We'll keep an eye on that, particularly for the rolling numbers there, just to see if this Q1 positivity that we saw is already going to start losing some steam. We do have jobs data on Friday for Canada. So that'll be one to watch for loony watchers, ahead of obviously the next Bank of Canada meeting. Other than that, a pretty quiet week on the data front at least, but obviously slap bang in the middle is that tariff deadline and what's going to come from it. Anything else you got your eye on this week, events, Kay?
Yeah, something which is not on that calendar we have, and that's both of us will need to keep an eye on that one. We have the June inflation data out of Mexico, and just on the day, and again on the day, the dollar is doing better. We see a little bit of a bounce back in the dollar mix. We're not really expecting anything on the July 9th deadline for Mexico trade, but because they are supposed to they have been sent over to the second half of the year at least, and then we still expecting that USMCA revision. So that's in theory being pushed further down the road. So that may be the one, because we have been on the approach of that 1850 that we are both watching, and we're seeing a little bit of a bounce from 1850s this morning. So I guess it's an interesting watch on what we will have on Wednesday for those Mexican inflation data.
Yeah, and also Canada's in the same boat as well with regarding this trade stuff. They're not so much under the spotlight as some of the other countries because of this USMCA stuff that will be happening later in the year. But that doesn't mean Trump won't throw a few threats around, because they are all still talking about trade stuff in the meantime. But these might be MEX and CAD, might be the lesser currencies that move as violently as some of the others. But yeah, got close. 50, was it 58 we got down to?
Yeah, something like that. I actually woke up in the middle of the night and I saw it not too far from there, and I went like, oh, all right, that's nice. Tomorrow morning, perhaps I'm going to even decide to buy them back if we're not too far from 1850, like 1855 or so. But waking up, it was already back up. This morning it was already back up at around 1866, 67. So I'm just waiting.
Yeah, still waiting and watching, and let's see what happens this week. Right, getting stuck into some of the other prices. Not well. Let's look at dollar yen quickly again. We're getting up above this 145 again. I'm not inclined to start stepping in front of any of these moves at the moment. If anything, I'll be probably a dip buyer for a couple of days at least, unless we're getting some big headlines. But it really is a bit of a coin toss what we might get on the headline front. So probably better to set your stall out a little wider. I'll be looking probably up towards this 147s, even some of these highs up towards 148s might be the ballpark. We need to see if we're up there on headlines and whatnot, and then we get a can kick and market starts forgetting about it, then that might indicate a bit of a top going in for this move. But I'm certainly not too excited about getting involved in the here and now with all the headline risk coming for the moment. Euro dollar, that's again, it's a difficult one because, you know, are we done with the highs? I wouldn't say so, but you know, I'm in full agreement with Kay. Whatever happens this week, you could get a move all the way down to 115, maybe even more, depending on what comes out. But there's plenty of levels in the way there. A lot of them fairly short term, some longer term stuff as well. We've had the prior low down here last week, down into that low 117. So that and the figures are going to be an area to watch as well, with a little bit of a safety net, sort of 85, 90-ish. There as well. So all these little levels, I'm going to take a lesson from our mate DK in the room. Don't trust anything today or this week. Yeah, go on, mate.
No, I was just laughing. Yes.
He doesn't trust anything any day.
No, he doesn't trust himself by the looks of things.
But yeah, this is a good time to bring that one out. I got tipped out my Aussie dollar long try. I've coloured it in as a bit of a zone now between this 65, 35 and 50s. We're back below there. I said if we get a break there, it might be a bit significant down to the figure. At least we even broke the figure. So fortunately, I when we were up here last week and I was off, I thought I'd tighten my stops up to just underneath this zone here. So I'm out of that. And it's back to the drawing board. And again, this is exactly the type of moves that we're seeing today and we could see for the rest of this week. I don't know where this is going to stop. The trend isn't yet for breaking, but a bit like euro dollar, we could see us down back to 64.40, maybe even worse, down to this level, which I think could be a bit significant now. More so than some of these levels in between, this 63.50. If we're breaking back below there, something is going horribly wrong. But if we're getting there over this trade stuff, but the headlines aren't too bad and we're holding it, then that might be a level, if we're there, that you can see a resumption of the trend once we get over this hump. But otherwise, 64.80 is a close level that we've messed around a bit previously. Keep an eye on that one. Then obviously the 64.40-45 level, which was a prior break point. But just keep an eye on this one. We've turned into probably a rally seller for a little bit of time now. But again, doesn't mean we're finished with this trend once we're over this hump. But let the price be the guide, as I like to say. Dollar CAD, another one I'm still short. Again, I've tightened up my stops just above 137. We have knocked our head on this 136.80-85 area just now. Again, it's just another one of these little levels that, you know, we have a move and it hits it and it holds it, or we have a little extension and it can't hold. So we're up there again. We're through this 136.50. That's really starting to wash out a bit as a major level. I won't get rid of it. I'll keep it there if we move well away from it and come back to it. But just looking back to last week, this looked like a decent protection hold of this low. I said it might happen in the 50s, 60s, 70s, happen in the 50s. So this will solidify the possibility of a decent bottom forming now. So any dips back down to this zone, if we hold around the 136s on a dip, that will look like another step up. And then, as I say, the case for finding a bottom that it hasn't managed to do all year will be growing. And then maybe we'll get a bit of a change, or at least a fairly decent bounce could take us back up to somewhere like the 140s. But if not, if we carve through that low, we're probably going to have a go at this low again and through there, and this trend will continue. So it's all about watching. Can we reverse, or is this just a short-term bounce for now? Right, Kane, I'm going to bounce it over to you, mate.
Yeah, okie dokie.
If I remember where the button is. Oh, it's there.
Just to reply to what Ali was asking there about flows. The outflows of the US have already well started, okay? I mean, perhaps not all done or whatever, but we have seen it during weeks, okay? Already. This whole trend, yeah, we know that some of it is tariffs and but a lot of it is worries about US debts, about US fiscality. So this whole move that we have already seen, and actually we have to go back even further, and I'd argue that we have seen this April. No, where is it? Sorry, where is it? So that's February. March. This is the April move, yeah. I think from here already, people were really this whole move of at least reallocating funds outside because of the reactions of the counterparts from the US. This has already started, and we've already done in this move, I would argue, a fair part of reallocation of funds. So it doesn't have to start. It started already. The only thing is that the people who are doing those kind of things, they are not only reallocating FX, they are also, we have seen at the same time before the S&P took back over. At the same time, we have seen stuff like DAX, for instance, completely outperforming the US equity. So this whole move that we have seen here has already been accompanied by a fair bit, I would say, reallocation of funds outside of the US. And again, we need to come back to a question that or something that we have been talking about. Don't think for a second that this is the end of the dollar, okay? I mean, yes, it could be, but I would argue maybe we are not even going to see it in our traders life. This is a reallocation, and which we have seen historically many times. You have a reallocation of funds, but this is not the death of the dollar. If anything happens that sees serious inflows and the market needs to rethink, this is not going to happen today. I'm going to repeat, but needs to rethink. You can hit 120, 125, 130 even in the euro dollar, and all of a sudden you're back at the year after at 110 or 105. Okay, this is just a reallocation of funds, and people who think that um, uh, that there is going to be um, good growth in Europe, and I'm not talking about GDP, but good growth of companies. If companies find those, for instance, those German restructuring projects, it's going to be good for German companies. Then they allocate money to those German companies or any other European companies who would be in the restructuring project as well. It is a reallocation of funds, and we can safely say, because people have been talking about it in articles and giving interviews, that we have already seen a fair bit of this reallocation. So is it going to continue? Well, that is now what we are waiting for, to see details on trade deals, details on tariffs. If it means that there's not going to be enough inflows in the US to compensate for the big beautiful bill, for instance, people are going to continue to reallocate outside of the US for a while. Okay, so now we need to wait to see if this trend is going to continue. That is just what I wanted to show. And just on the day, we were trying to make a bit of a triangle here, but I would say the more important points that we are going to have to look at for the initial moves, probably 116.80, 118.20, okay, outside of there. You already, yeah, you already showed the dollar yen, right?
Yeah,
And you showed the Aussie as well.
yeah,
Okay. Um, Kiwi is in a similar situation, and we are also ahead of the RBNZ, but we have broken outside of this triangle. 60, 35, 30, 45 was always a bit of a hinge around which the market turned. We are back below. Before this whole thing is over, we probably maybe some sorry, maybe going to have a look at 59.70. Why not even 59.30? But the whole thing will not materially reverse before we break I'd say under 59, 59 three quarters. But already now, I think we can expect at least until RBNZ, or we see clarity surrounding tariffs, a more rangy picture. And looking at this move has been relatively speedy. I'd expect some offers coming in if ever we get back up to 60, 35, 45 on the Kiwi. I would be surprised if if any time really on the day we can move back above it. Gold, there is. I think we are in a range now, 32.85, 33.40, 45. Waiting for the tariffs. The move that we saw here, that quick $100, we are trying to completely correct it. Yeah, it's an important trend line, but then having with what's coming up, I'm always reluctant to really bank on a trend line, although it has been respected. So yeah, and if ever we would get below 32.85, I think there's a chance to get quickly back down to 32.45, but it could already hold here, as we see in the global scheme of the move. We have constantly seen higher lows, so it could be that we it's already enough here. But a lot will depend on what happens on the 9th, and then the outlook, if we have an outlook for the 1st of August. Again, as we've spoken before, I think that on the 9th we are going to have perhaps some minor countries deals announced, but the big blocks won't be announcing anything. And yeah, I think on the contrary, there may be some sticking points, and if it's not a good outlook for any trade deals with the bigger blocks, or a structure for a deal at least, I think we could actually spike back up. But we still have to see what's going on. Silver is holding a lot better in still. Even if we see a failure up here, and I was pretty lucky, I put a partial take profit right around here, 37.20, ahead of this zone, which have been done and which I bought already back. But again, I would just simply remind people what happened every time we get back into the 35s, into the mid 35s. All those spike lowers have been snapped up relatively swiftly. Okay, so we are turning around, in my opinion, a 36.25 kind of pivot for the start of the week. If we break above 37, 20, 30, we're on our way to 38 and 38.5. But and for as long as that we are above this zone here in the 35, still very bullish, and actually looking better than gold still, in my opinion. So that for this metal. I haven't seen what Archibald was saying.
I've replied to all that, Kay.
You replied to it already? Okay,
Yeah.
that's lovely. Well, so we've been talking enough about it. I think we need to watch what's going on and what's going to happen with risk, with everything. In the meantime, just be a bit patient, I would say, to start the week. Back over to you, Ryan.
Thank you very much, mate. That's us set up for the week ahead, or set up as we can be anyway, for what's to come. So have a great week, everybody. Have a great day, and we will see you all bright and breezy tomorrow. Have a good one.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.